fair game. I don't think there's anybody in the crypto world that would say, no, we want the exchanges to rip people off. Of course not. Nobody wants the exchanges to rip people off. Of course not. So if like exchanges are doing shady things, they should not do that. Everybody would agree. Everybody would agree that if there was a registration process for coins to ICO, just like companies IPO, that is, they are underwritten, they're audited, and they provide disclosures and financial statements, and they prove this, then it could be in a standardized method up to individual investors whether or not it is reasonable to invest in that security or token or coin or whatever you want to call it. Doesn't matter. It would be up to the investor to make that choice, and the investor should have that choice, as long as there's not somebody ripping them off, like an exchange ripping them off. That's fair. But I think at least 3 times during this discussion, Gary Gensler's like, we've already got digital currency. We have a dollar. We have a euro. What do we need crypto for? In so many words. That's bad. That is not the argument you want to make. Because now what you do is you take common sense people who would go, yeah, I want disclosure. Yeah, I don't want to get ripped off. I'm on board. And then you go, wait a minute. Is there a bigger thing going on? Are you afraid of crypto? Do you just not want crypto?
We are operating as a curse word, unlicensed security exchange in the USA, bro. They also have CEO A and CEO B on the inside. Criminal enterprise.
That's the line that stood out yesterday.
Criminal enterprise.
How do we explain getting past the IPO process then?
Well,
no, it's different.
What for Coinbase?
For Coin, yeah.
Well, Coinbase, I think they bulldozed their way in. I think that they felt that they could
No.
break the law.
Complete misunderstanding.
Right.
Remember, when you list on an exchange, what you're doing is you're offering shares for sale of a company. For example, when a SPAC goes public, maybe only 8% of the actual underlying company is public, and the rest gets held privately. All you're doing is offering those shares up for sale. You're saying, I got a security, and I want to sell it. It's shares of Coinbase. The SEC doesn't look and say, is your business doing everything legally? Is it, in other words, is every operation of it legal? Is it a good investment? They look at it, do we have our disclosures? Did they follow the forms? And then they go, yeah, I guess you could sell those shares. And then that way, investors can look at the SEC.gov website and look at filings for the companies and go, okay, do I have the information available for me to evaluate if this is a good investment? See, it's not the SEC's job to make sure you're making a good investment. It's just that it would be a fair investment. Now, I know it seems unfair that it's like, okay, well, like, wouldn't it make sense to then investigate the company at the time they register for their IPO? But then the counter argument is, well, should the SEC just tell everybody, F you can't list your shares for sale in a bull market because we want to decide whether, we're okay with crypto brokerages in the first place. Those potentially are completely different parts of the SEC. Like, and you have to remember it's the government. So, like, it doesn't always make sense. It's kind of like, I'm trying to think of an analogy here, but it like, to some extent, it's like, let's say you're a drug dealer and you go into the DMV and you're like, yo, I need a driver license. The DMV is like, all right, go do a vision test and do a 3-point turn. Here's your driver license. So, like, should the drug dealer not have gotten the driver license because the DMV should have investigated they were a drug dealer? That would be kind of a potential analogy. Again, I'm not trying to, like, defend the SEC here or whatever. Like, I don't care. I don't have a horse in this race. I'm just trying to, like, I like to think about these things from a logical point of view and challenge why you could register a security to sell it without necessarily qualifying whether what is happening after that is 100% within all bounds of the law. Same as with a driver license, right? That's my thesis. It's my thesis. I'm sticking to it.
Enrich people. Now, the reason I point out is that a lot of our viewers have trafficked in these things. And what you find out in the very long Binance is, well, let's just say Polygon, Matic, you've been hacked.
And this, Daniel, that's a really good follow-up here. Did the DMV know he was a drug dealer? I mean, really what you're saying is like, oh, but the SEC would have known this was a crypto brokerage, right? But then does the SEC even know that it is illegal to operate a crypto brokerage? They can allege that it is. Ultimately, it's up to a judge. And ultimately, after that, it's up to society, who gets to decide via Congress. So it's kind of like nobody actually knows. It's like, is that a legal drug or is it an illegal drug? I don't know.
To make it so that they were bigger than anyone realized when they weren't.
Super
There
great.
you go. There's my background.
With that, let's get.
And I think because it's so gray, you don't actually have a reason to disqualify the offering. Oh, here we
Be
go.
with you, sir.
We've had you on several times, and we've tried to get from you a sense of timing when there would be more clarity regarding this space. It feels like now's that moment.
Look, I think there's been clarity for years. The investing public has the benefit of the U.S. securities laws. Crypto should be no different. And these platforms, these intermediaries need to come into compliance and protect the investing public.
Which of the cases we're talking about, do you want to take them one by one? Which is more important in your view?
You're leading this interview. I'm going to follow you where you are. But let me just say this to the investing public. These trading platforms, they call themselves exchanges, are commingling a number of functions, which in traditional finance, we don't see the New York Stock Exchange also operating a hedge fund, making markets, and as we alleged in Binance, having a sister organization, flooding the platform with transactions called wash trading, and the lack of controls on the platforms is really a web of deception and conflicts, along with a control person, Mr. Zhao, trying to evade U.S. law.
Okay, that's Binance. Binance doing the wash trading in that.
You say to viewers who wonder why enforcement has taken arguably at least several years, so long.
Look, it takes time. We do things by the book. That's what the American public would want us to do. We follow the facts and the law. And I couldn't be more proud of the investigative teams at the SEC working together with colleagues in our various divisions of trading and markets, our general counsel's office, 5 commissioners. But it really, it's a lot of, is a gumshoe, walk in the beat investigation to build a case like what you've seen alleged in a 136-page complaint.
Mr. Chairman, a lot of it is hard to understand. For instance, in the Binance complaint, you say, Mr. Chairman, I need to know this. The SEC's Binance complaint also seeks emergency relief, like an asset freeze, expedited discovery, and even the appointment of a receiver. Are there more pleadings coming? Because if you do this, that's the end of Binance.
Look, we have concerns, and I think the investing public should be aware of putting their hard-earned assets onto these platforms. But we have concerns when a platform like this puts themselves out to the public, consciously trying to evade U.S. law and customer funds. You didn't even know who was custodying them. Was it custodied here in the U.S. on the U.S. platform? Was it custodied overseas? Or were some of your funds in crypto possibly moved to affiliates? There are a number of affiliates named in this called Merit Peak and Sigma Chain.
All Binance.
It's fundamentally a lack of controls, deception, conflicts. And yes, we're going to do that which we can in front of the courts and make, to the extent we can, the facts known and the public protected.
Yeah, but what about
When I read
Coinbase?
your Binance, I cannot understand how anyone can assign a value to crypto. It seems entirely predicated on the greater fool theory. Do you disagree?
Look, we as an agency are meant to be merit neutral, Jim. There's a lot of questions, 10 to 20,000 tokens. Actually, in the Coinbase complaint, we note that they have, through the Coinbase wallet, you can trade 16,000 different tokens. And there's a lot of debate as to the use cases and whether there's any there. Look, we don't need more digital currency. We already have digital currency. It's called the US dollar. It's called the euro. It's called the yen. They're all digital right now. We already have digital investments. And you have digital, you have entrepreneurs.
It kind of makes it sound like he just doesn't like crypto.
All day long. And it's whether it's the big tech companies, the automobile companies, you name it. It's all digital right now, the investing world. So what is the real underlying value of these tokens? And that's why you need full, fair, and truthful disclosures. And that's the regime the securities laws was set up. When there's a group of entrepreneurs, those entrepreneurs should be able to put their case in front of the investing public in what's called a filing.
Yeah.
That's kind of the bedrock of what President Roosevelt and Congress worked on 90 years ago.
Well, I agree.
Chair Gensler is David.
So let them do it.
Characterize?
So let the people do it. That's what Coinbase and crypto enthusiasts have wanted to do. Let it be registered. But Gary Gensler can't let it be registered because there is no process to register crypto because Congress hasn't done anything. That's the problem.
I would assume, obviously, given the complaint, they didn't quite get there. But can you give our viewers any sense as to what's happened to get to this point?
Look, I'm not going to go into any one set of conversations between the agency and a company, but we've had discussions with literally dozens of crypto incumbents, including the ones that you just mentioned. And what we find is this is a field that's built. The whole business model is built on non-compliance with the U.S. securities laws. And we're asking them to come into compliance, and they're going a bit of catch us if you can. That's a sort of generalization. And they're commingling various functions that traditional finance we don't allow. I mean, the public would be aghast if they thought the New York Stock Exchange was also running a hedge fund trading against them, or allowing wash trading, or lacked controls to protect against fraud and manipulation on the platform. And so the conversations have been constructive, but it's also about them bringing a business model into compliance. We have had success. There was, even in the last 2 weeks, an entity filed as a crypto entity filed as what's called a special purpose broker dealer and got registered that way. We've had successes with tokens, but now it's about these crypto exchanges in the middle of the market where, frankly, the public should really be careful.
But all right,
So they should double down on this idea of like, okay, well, how did they succeed? And maybe how could Coinbase succeed? But why sue
no
them?
longer have a business?
Look, I think if there's a real value in these crypto tokens, then compliance will build trust and the business model might change. It's the hard work of earning the investing public's trust. The innovations, what we're doing at the SEC is pro-innovation because without trust, the capital markets really don't work. That's the casino capitalism might work. Wild West capitalism might work for the people that are picking the pocket of the public. But I'm talking about really work for issuers, raising money, and investors alike. And to do that, you need integrity and rules of the road in the middle.
Chairman Gensler, in your Binance brief, you list the following: Soldana, 88 Cardano,
Here we go.
Matic Polygon, Phil Filecoin, Atom Cosmos Hub, Sand Ethereum, native token of the Sandbox platform, Mana Decentraland, Algo Algorand, Cody Digital Infrastructure Payments, Are these not completely concocted counterfeits, counterfeit currencies, counterfeit securities, manufactured to enrich the dealers and not to be able to help anyone who purchased these?
But let me help the investing public. On these platforms, they often have hundreds of tokens. Coinbase has about 250 on their Coinbase platform and 16,000 that you can trade on their wallet. Binance is measured in the hundreds as well. And all we have to show is that one of them is a security, and they should be properly registering and having rule books against fraud and manipulation as an exchange, broker, and the like. You asked a question, Jim, about individual tokens, and we laid out for a judge and the public, and we're very confident in this, I think it was a dozen tokens in each of these complaints. It's for the public to decide what they want to invest in, but it's law that it should be based on proper disclosure. And without that proper disclosure, the public can't answer the question as to whether it's just, as you say, counterfeiting or it's a scam or something else. It's those disclosures that helps the public understand. Otherwise, you're just chasing after something, and this is a field with a lot of hype and hucksters and fraudsters.
I know it's not your job to talk about what these are worth. That's my job. Sir, they're worthless.
Look, there's by some estimates 20,000+ tokens, and I would just say many of these will fail because many entrepreneurial projects fail. But there's a second thing, frankly, is we have not seen over the centuries that economies or the public needs more than one way to move value. People talk about, well, this is an innovation about moving value on the internet. And Satoshi Nakamoto did have fundamental innovations about distributed ledger technology and the like. But do we collectively, will an economy support more than the US dollar, the euro, the yen? And so what we really have here are tokens that are speculative investment vehicles, and people are betting on a group of entrepreneurs in the middle, and they're reading websites, they're reading Twitter posts. Many of those tokens that you mentioned are hiring lawyers or already have lawyers. So there are somebody. It belies logic that these are just, out there from the thin air tokens that are so-called decentralized, and there's nobody in the middle. It's just belies logic, and the American public understands this. There's a group of entrepreneurs, their CEOs go to crypto conferences, they hire lawyers, they contest what we say, but by and large, these meet the test of an investment contract or a security. And then the public can decide whether there's any value there or whether it's thin air, as you say.
I mean, I hate to say, but it really sounds like Gary's like, we only have room for the dollar. There's no room for crypto. It's one thing if he's like, look, we just want them to register and file a set of disclosures just like when a company files, and then let them all register. But when that would be okay. I'd be okay with that. It's like, yeah, have your disclosures. But this idea of like, we only got room for the dollar, I don't think that's a convincing argument, actually, Gary.
Through appropriate regulation of the securities markets for 90 years, we have helped this economy, the U.S. economy, grow and prosper. Our capital markets are 40% of the world's capital markets. We're only 23% of the world's economy and only 4% of the world's population. We punch above our weight class in the capital markets in part because of robust oversight of the markets. And it's for one reason: it builds trust in the investing public. You become the destination of choice. If you build trust, the crypto markets are undermining that trust. And I would say this: it undermines our overall capital markets. One sector, $100 trillion capital markets, and one sector is kind of running around like the Wild West, catch us if you can. That undermines trust in the $100 trillion
I mean, I believe Binance is doing that, but let people do it right. And it seemed like Coinbase was trying to do it right.
So what now? What next? Do these two complaints represent your main move here legally, or is there potentially more to come? And just give our viewers some sense as to how long.
I think we've got one goal, is protecting the investing public, ensuring that issuers can access a market that people trust. This is about both investors and issuers. And in the crypto space is to bring them into compliance.
Okay.
We brought a number of actions. We stand ready to continue to work with the industry to have them come into compliance.
Then don't tell us there's no room for them and there's only room for the dollar.
Operations, properly do the disclosures, segregate your customer funds from your own. Don't trade against your customers.
That's fair.
There's a lot of work here for the crypto field, but we stand ready to work to get them into compliance.
Chairman Gensler, after I read what you have, which is BAM CEO A, BAM CEO B, you obviously have inside people. What it tells me is there probably is commingling here. This is no different from SBF. And if you have your money with Binance, you should get it out right now.
Look, I've already read the articles in the last day, drawing parallels to the. We've also alleged fraud and manipulation at FTX and with regard to Sam Bankman-Fried. Let me just say the business model of crypto intermediaries intermingles, commingles funds, trades against their customers. In this case, in the Binance case, yes, we have alleged that sister organizations, Sigma Chain and Merit Peak, were being controlled by Mr. Zhao and used on the platform. Sigma Chain was helping trade on that, be a market maker, boost, as we allege, boost the volumes, corrupted the numbers because of the lack of controls, and Merit Peak, that billions of dollars of customer funds were flowing there. So you draw the parallels as you wish, but I do think that the public should beware. And I would say this to investment advisors, registered investment advisors. We have a rule from 2009 about proper custody and how you custody funds and securities. Make no mistake, it is not proper custody to have funds and crypto securities on platforms like Binance, or if it's not properly segregated with a qualified custodian on any of these platforms.
Dude.
That's definitely going to ring in the halls of advisors today.
Yeah, that's a threat. That's a threat to every investment advisor that has money on behalf of their clients in crypto exchanges, even like Gemini potentially.
When we come back, Wall Street's reaction to Apple's new mixed reality headset.
Wow, that's a threat to investment advisors he just left off on. That's intense. Okay, on one hand, let's make it very clear. If Gary Gensler's like, look, if you're going to be an exchange, have one entity that is an exchange, have one entity that holds your client's money, and don't trade against your client's trades. Like, don't rip your clients off. Fair game. I don't think there's anybody in the crypto world that would say, no, we want the exchanges to rip people off. Of course not. Nobody wants the exchanges to rip people off. Of course not. So if exchanges are doing shady things, they should not do that. Everybody would agree. Everybody would agree that if there was a registration process for coins to ICO, just like companies IPO, that is, they are underwritten, they're audited, and they provide disclosures and financial statements, and they prove this, then it could be in a standardized method up to individual investors whether or not it is reasonable to invest in that security or token or coin or whatever you want to call it. Doesn't matter. It would be up to the investor to make that choice, and the investor should have that choice, as long as there's not somebody ripping them off, like an exchange ripping them off. That's fair. But I think at least 3 times during this discussion, Gary Gensler's like, we've already got digital currency. You know, we have a dollar. We have a euro. What do we need crypto for? In so many words. That's bad. That is not the argument you want to make. Because now what you do is you take common sense people who would go, yeah, I want disclosure. Yeah, I don't want to get ripped off. I'm on board. And then you go, wait a minute. Is there a bigger thing going on? Are you afraid of crypto? Do you just not want crypto? So is it about you not wanting crypto because you are trying to protect the dollar? Or is it about disclosure and being ripped off by the brokerages? Which one is it, Gary? Because if it's just one we can all agree on, then let's just talk about that. If it's any degree we just don't want crypto, then I don't know that that's reasonable, because society, at least some part of society, wants crypto. And I don't know if it is the place of the chairperson of the SEC to determine what society wants. That's Congress's job, not the SEC's job. So a little confusion there. Something to be clarified. I gotta go to the bathroom now. So, if you like my perspectives and you want to join me in the course member live streams, please join me in the course's link down below. I've got to go, and I am going to go live for the course member live stream right away. Now, I want you to know this. When it comes to AI, time is what's going to make you money. And if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced by